I'm a student of economics, and what economics has taught me is that life is all about, trade-off, and it is like, how people kind of make money and behave with money is another thing, that I have always observed. So, क्या होता है कि when it comes to ideally selecting between these products, you have to understand what is the trade-off that you're looking for. Are you wanting to trade off, you know? Liquidity with higher return? If you can trade off liquidity for higher return, then go for AIF, because AIFs will definitely demand longer time horizon. AIF will invest into some less liquid instruments, and with sacrificing liquidity you will get higher returns. Today, in case of unlisted equities, the taxation is similar to listed equities, and hence obviously, investing in unlisted equities relatively has become more attractive as another, I would say, way of making money. But again, it is not that simple. You cannot do that yourself. There are many investors who are kind of trying to invest in unlisted equities themselves, thinking and seeing that there is a quick boom which is going on. It's absolutely very risky. All that should be attempted through a structure like AIF, but only when, again, I'm saying, not for everybody, when you have a minimum portfolio of at least 7.5 to 10 crores. So for those investors who are prepared to trade off, that yes, now I'm ready to trade off my liquidity for higher return, go for AIF. Those investors who are ready to trade off, investing into concentrated structure for higher return and hence take higher risk of volatility, go for PMS, because that's a structure which obviously will have more volatility when markets will be kind of, on the downward trend.